Hey, you want to see something that's going to blow your mind? In a minute, I'm going to show you some numbers that are going to be truly eye-opening. And as the title of this video says, if you procrastinate, you are going to completely miss out. So I'm sure most of you have heard the expression, the early bird catches the worm. Well, in this video, that saying is so apropos to what I'm about to show you. So if you watched my last video, which was all about how to become a millionaire and the easy and simple way to do that, I showed you a simple investment calculator that showed you exactly how much you needed to put away each month for X amount of years with a certain percentage return. Well, there's one thing that is most important out of all else, and I didn't stress it enough in the last video. So what I want to show you in this video, and these numbers are going to be truly mind-blowing when you see, is that the earlier you start, the better. So if you procrastinate, you are going to lose. All right, so let's just jump right in and show you what I'm talking about here. All right, everyone, Lee Lowell here from smartoptionseller.com. Now, we are all about option trading at the Smart Option Seller, specifically option selling. But every once in a while, we like to make other videos that people have an interest in. And in this case, we're talking about what's going to happen if you procrastinate on your path to becoming a millionaire. All right. So let's just jump right in. And I want to show you what we were talking about last week. And then I will show you these mind-blowing numbers about what happens if you do procrastinate and put off your investing or savings plan into the future. All right. So let's just take a look here. This is the options calculator. I'm sorry, investment calculator that we were looking at last week. And I just want to reiterate what we were doing. The goal is to become a millionaire. Okay. And there's a very easy and passive way to get there. It takes a long time, but it is done in the background. You really never know that it's happening. All you have to do is put away money each month, small amount of money. And a few decades later, and I know that sounds like a long time, but it's something that you're not even going to realize is happening. And decades later, you will have $1 million. And so this investment calculator that you can get for free, here's the address up here. It's very long. I put a link down below in the description. Please read the description down below. I have the link for this free calculator. So the assumptions are, we're starting out, in your very early 20s. In the U.S. here, at least, this is when most people finish college, if they go to college and they start working mostly full time. So we're talking about a long-term duration here. So the assumption is that you're starting out with $0 in your bank account, and you're going to invest for 45 years, which will take you to about 67 years of age, which is the retirement age in the United States. And you're going to get an 8.5% return. That's your goal, is to get at least an 8.5% return. And the way to get that 8.5% return, what I talked about in the last video, is investing in the stock market by investing and or saving in a very easy passive S&P 500 fund. And I'm going to show you a couple symbols of stock symbols that you can use, because people are asking me what they should use as their investing vehicle. And you're going to compound this monthly. You're going to put in $160 every single month from your savings or your paycheck or whatever money you have. You can scrounge up $160 and you're going to put that away each month for the next 45 years. And this is the end result you were going to get. You would reach just over $1 million in 45 years by just putting away $160 a month and having an average annual return of 8.5%. Okay, so down here is the schedule of how the numbers look at the end of each year, and at the end of 45 years, you'll have your $1 million. All right. So let me quickly just show you some of the vehicles that you can use for this investing and or saving. This is part of in the stock market. So here's a chart. We're going to look at a long-term chart of what you can use. And we talked about the S&P 500. And the S&P 500 is basically a vehicle that invests in the 500, some of the 500 biggest stocks in the stock market. Okay. And this is going back to, let's look at the actual S&P itself. This is the SPX, S&P 500. And we're going to look at the monthly chart. So going back, about 50 years from now to 1975. And here's how the stock market, this is an actual chart of the stock market, basically the stock market, the S&P 500. And you can see over time how the stock market has gone up. So Over the last 50 years, the stock market has returned roughly an average percentage return of about 10%. Okay, so we took that down a little bit to adjust for inflation. About 8.5% per year you can get if you stay in the stock market for the long term. Now you can't buy the S&P 500 index itself because it's not a tradable stock vehicle. But what you can do is invest in something called the SPY, which is, here's the symbol up here, SPY. Okay, so this is an ETF, an exchange traded fund that you can invest in. You can buy and sell at whim. It's just like a stock. You can buy it and hold it for 40 years or buy and hold it for 5 minutes. It doesn't matter how long your holding period is. But since this is a long-term thing, we're talking about you want to be able to hold it. So the SPY is one of the ETFs you can look at. You can look at what's called, the symbol is VOO. Okay, this is Vanguard's, you can read the symbol up here, Vanguard's ETF. For the S&P 500. Now, it doesn't have the long-term history as the SPY, which goes back to about the early 1990s. VOO, which is the same thing. These all invest in the 500 stocks that are in the S&P 500. This has been going since about 2010. Or you can even look at the Vanguard mutual fund itself, which is the VFINX, if I can type properly. Okay, so this is the Vanguard S&P 500 mutual fund that if you have money in Vanguard, you can invest in this fund, and you can see it has a very similar trajectory as the S&P 500 itself. Or if you have a Charles Schwab account, you can invest in their SWPPX, I think is the symbol at Schwab. Okay, so this is their S&P 500 fund as well, going back to the late 1990s. As you can see the trajectory as well. So if you want to get that 8.5% annual percentage return, you can invest in one of these things, and you're going to put that, let's go back to the calculator here, you're going to put that $160 in per month, and you're going to end up with your $1 million. All right, this is very easy, passive. And, all it takes is a little bit of money that you just put away, just, put on the blinders, and you just put in $160 a month and let it go from there. All right. So to the mind-blowing numbers that I wanted to show you, here's where it gets really, really, really interesting and really, really important as well. We talked about time in the last video, which I'll put a link down here, the description. You can watch that video from last week, and it'll also be on the screen at the end of this video. Time is very important. Now, not just the amount of time that you're in the market, but how early you start putting away for your savings, okay? The stress here is that you want to start as early as you can. Now, depending on your age right now, it's never a bad time to start no matter where you are. Okay, saving now is better than not saving at all. But starting very early, and we're talking about early 20s, is probably the best time to start because you'll have that long trajectory. So if you have kids or grandkids that are in that age group, stress to them, do you want to start putting away money for them now? Or even start doing it yourself for them if you want, okay? But the key here, and this is where the mind-blowing numbers come in, any amount of time that you delay this savings process is going to hurt you drastically. If you procrastinate even by a small amount, it will hurt you drastically, okay? Now, I want to show you what that means. So we're going to take two different people here. We're going to have someone that is going to invest $160 just for the first 10 years and then not put in another dime for the rest of the 45 years. And then we're going to have someone who's procrastinates for 10 years and starts in their 30s and only can invest for the next 35 years. And I want to show you what happens between those two people. So here we're going to go. We're going to change the numbers here. We're only going to invest the $160 just for 10 years, and we're going to see what that result is. Okay, so after 10 years of putting in $160, you're going to end up with $30,315. So what we're going to do is we're going to put in the $30,315 here, and we're going to have that saving for the next 35 years because our overall goal is 45 years. So they invested for 10 years putting money away, and the next 35 years they're not going to put in another single dime into their savings plan. And let's see where they are at the end of 30 years. Okay, so at the end of 45 years, I should say, they're going to have a total sum of $587,000. Okay, so they just invested for the first 10 years and stopped from that point, and the next 35 years they didn't put in another dime. They ended up with $587,000. All right, so now we're going to talk about someone who starts with $0, but puts off those first 10 years of investing because the excuses are, well, I don't have the money now, or, why do I want to put in money now? I've got so many more years to retire. Why do I want to do that now? I need that $160. I have to buy my Starbucks every day, or I've got my Hulu account, my Spotify account, my Amazon Prime account, all these other things. You get your $6 Starbucks lattes every day. Everyone can find some amount of money that they can put away each month. It's easier to do than you think. You take an inventory of what you're spending each month. You realize, oh, okay, I can cut back a little bit here, and come up with some money. All right, so here's where it gets really crazy. Now remember, $587,000 is what the other person had when they only invested for those first 10 years. So now we got someone who procrastinated for 10 years and they only have 35 years left to invest. They're going to put in that $160 per month for 35 years. So I want to show you what's going to happen just because someone procrastinated for 10 years, but decides to start investing for 35 years. 35 years are putting in $160,000. Do you think their end number is going to be more or less than this? Okay, so here's what we get. Boom, right there. For only $418,000. That's about $170,000 less than the person that only saved for 10 years. How mind-blowing is that? You got someone that only saved for 10 years, yet they end up with a larger amount of money than someone that saved for 35 years. The key here is that those early years, the earlier you start, the better, because that early amount will start to snowball on itself more and more and more and get bigger over time. Then if you wait, the longer you wait, the less that you're going to end up with. I mean, how crazy is that? Someone saved for 10 years only and someone saved for 35 years, but yet the first person that only saved for 10 years ends up with more money. Remember, that figure was $587,000. So it's almost $169,000 to be exact that you're giving up by procrastinating. You don't want to procrastinate. Okay, that's how it is. That's just what it is. So try to find yourself any amount of money that you can start putting away. Now, I know a lot of us, even including myself, didn't start in my early 20s because I had that mindset, oh, retirement's so far away. Why do I need to put in money now? The way that, and on an optimistic note here, is the way that you can try to catch up, if you want to use that word, is that you either have to get a bigger percentage return. So let's just see what happens if this person was able to get 10% a year for those 35 years. Okay, so there you go. They would overcome that $587,000. So you either have to increase your percentage return, let's bring this back to the original 8.5%, or increase your monthly amount. Let's see what happens if they go up to $200 a month and see what they get. No, not enough yet. That's $5. If they put away $210, let's just go through some examples here. $220. All right, how about $230? Okay, we want to get past that $587,000. Okay, so somewhere between $220 and $230 is where they'd have to be. They'd have to bump up their, instead of $160, they'd have to get up to $230. Now, if you're starting in, your 40s and you only have, 25 years to invest, now the numbers start to get a lot smaller. So now you really have to start bumping this thing up. Let's say $500 a month. And you're not even there yet. I mean, so the longer that you wait, the more money you're going to have to put in each month. Okay, so you can see the power of starting early. The less money you'll have to put in, and your return doesn't have to be as big as for someone who starts later in life. Now, I don't want to say that we're all doomed here, because saving any money is a good thing, no matter when you start. Just try to put away something. If you want to do it in the stock market, put it in the stock market. Now, there's no guarantees, okay? There's no guarantees that the stock market is going to return that same 8.5% per year on average, but there's a good chance it will. So I don't want anyone to think that this is guaranteed, but the stock market has been returning that amount of percent return each year for at least the last 50 years, maybe longer. So that is your best bet. Now, if you want to put money in, gold, real estate, even just in the online money market accounts, which are returning 4% a year, it's better than doing nothing. All right, so that's the lesson here today. I wanted to just show you some of these crazy numbers, how the earlier you start saving, the better. All right, so let's just quickly go to our website. I want to show you what we do here at the Smart Options Seller. We're all about options trading. Okay, so talking about how to invest being a millionaire is something that we can do on top of that. Now, that $1 million that you can get through your 45 years of saving is going to be on top of whatever else you earn from your job or any other savings you have or whatever else other ways you may make money. Here at the Smart Options Seller, we trade options, so we have another added level of income that we generate as well. And we do that by selling put options. Selling put options is our main gig. If you know nothing about selling put options, go to our website, smartoptionseller.com. Click on the free ebook, which is right here, Put Selling Basics. If you know nothing about what put selling is, if you've never even heard the term before, get our free ebook, okay? You can scroll down, you can read some of the testimonials here, put in your name and email address. We will email you back an email message with a link to download the free ebook. Get it, read it, learn about it. We also have our video series here, which is a 5-part, 5-hour video series going much deeper into what put selling is all about. If you want to look at that. We also have our services here. This is what we offer. We have our newsletters that we offer. These are paid services, newsletters. We have our one-on-one coaching, and we have a probability calculator as well. If you get the video series, you also get 30 days free to our Smart Options Seller newsletter, which is selling put options. All right. Down in the description below, please read the description. I have a lot of links below the description on books and websites and services and other things that can help your options trading game. Please read down below for what we offer. If you found this video helpful, please give me a thumbs up, give me a like, leave me a comment. I really want these videos to go viral. I make these free videos for the trading community. I want to help everybody out. We all want to help each other. So let's do that. Help me make these videos go viral. Give me the thumbs up. Let's get YouTube to recognize these things so we can get everyone to see them. All right. Send me an email. I'll always answer your emails. And on the screen, like I said, I'm going to put the video from last week or last video that I made about becoming a millionaire. Watch that. It's very helpful. All right. That's it for me today. Hope everyone is doing well. This is Lee Lowell signing off.